Okay, so there is a huge shift happening right under our noses in the world of investing, and you really need to know about it. The ultra wealthy, we're talking the big money, are quietly moving their capital away from the strategies that most people are chasing. They're moving into a very specific kind of asset. So let's dive in and break down what's really going on.
And this right here, this is the core of it. While all the headlines are screaming about AI and the next big growth stock, the smart money is playing a completely different game. It's not about speculation, it's about something way more powerful, way more reliable. And this slide just lays it all out perfectly, right? You've got two totally different games being played. On the left, that's what most people are focused on, the capital gains game. It's like being on a wild roller coaster. Your net worth can shoot to the moon one day and then completely crash the next, all based on market hype. But on the right, that's the cash flow game. Think of it like building a pipeline. It might not be as sexy, but it delivers a steady, predictable stream of cash into your pocket, month after month. And that, right there, is the huge difference between looking rich on a spreadsheet and actually being wealthy. Okay, so to really get this shift, we've got to challenge some of the fundamental rules about money that have been drilled into us our whole lives. It's time to unlearn some of the stuff that's probably holding you back.
It all starts with this definition from Robert Kiyosaki, and it's so simple, it's almost deceptive. Just forget everything you learned in accounting class for a second. In this world, it doesn't matter what something is called. The only thing that matters is which way the cash is flowing. If it puts money in your pocket, it's an asset. If it takes money out of your pocket, it's a liability. That's it. End of story.
All right, so let's use that logic. What about your own home, the place you live? Is it an asset? Well, think about it. Every single month, you've got the mortgage, property taxes, insurance, stuff breaking. Money is just flowing out of your pocket. Now, you might hope it goes up in value. That's a capital gain, but it's not generating any income. So by this definition, it's a liability, and understanding that difference is absolutely crucial.
This right here, the cash flow quadrant. Honestly, think of it as a map to financial freedom. Most of us start out on the left side, as an employee or self-employed. We're trading our time for money. The big problem? You stop working, the money stops. Simple as that. The whole goal is to move to the right side, where you're a business owner or an investor. That's where you build systems and acquire assets that work for you, making money around the clock.
And here's another huge myth we've all been fed. All debt is bad. Nope, that is just not true. There's a world of difference between bad debt and good debt. Bad debt is what most people are familiar with, right? Using credit cards for vacation, getting a loan for a car that loses value the second you drive it off the lot. It just sucks money from you. But good debt, oh, that's what the wealthy use. They call it leverage. They'll borrow money to buy an asset like an apartment building and then have their tenants pay off that debt for them while they pocket the cash flow. It's a tool to build wealth faster than you ever could on your own.
So now that we've got those foundational ideas down, let's actually open up the playbook. How exactly are the wealthy generating these incredible income streams? Let's get into the specific strategies.
In the world of real estate, one of the most powerful plays is the BRRR method. It sounds kind of funny, but it's a game changer. Here's how it works. You buy a rundown property for cheap. Then you rehab it, fixing it up and forcing the value to increase. Then you rent it out. Once you've got tenants in there paying rent, the bank sees a stable, money-making asset, so you can go and refinance, pulling all of your original cash back out tax-free. And then the best part? You repeat the whole process. You're using the same money over and over again to keep buying more cash-flowing properties. It's incredible.
In this slide, man, it just gets to the heart of it, doesn't it? Sure, that big number in your 401k looks great on paper, but you can't go to the grocery store and pay your bills with your net worth. Consistent cash flow, though, that's the real deal. That's the money that actually hits your bank account every single month, whether the stock market is up or down. That is the bedrock of true financial freedom. And look, this whole cash flow mindset isn't just about real estate. You can absolutely apply it to paper assets too. I mean, beyond just dividend stocks and bonds, you can get more sophisticated. With cash-covered puts, you can literally get paid to wait to buy a stock at a price you already want it. Or with covered calls, you can generate extra income from stocks you already own. It's all about making every single one of your assets work harder for you. You know, Warren Buffett really said it best. If you don't find a way to make money while you're sleeping, you will work until you die. That's the entire goal right there, to build this asset column that just churns out income for you 24/7, whether you're working, sleeping, or on a beach somewhere. That's how you escape the trap of trading your time for money. Now, you might be sitting there thinking, okay, I get it. This is a great long-term strategy, but what's the big rush? Well, here's the thing. This isn't just some timeless principle we're talking about. This whole shift from growth to cash flow is being supercharged by some major economic events that are all coming together right now. There is a real window of opportunity opening up. This number. This is the reason for the urgency. People are calling it the wall of maturity. We're talking about nearly $2 trillion in commercial real estate loans that were financed back when interest rates were basically zero. Now they're all coming due, and property owners are going to have to refinance at today's much, much higher rates. A lot of them won't be able to, and that means a wave of forced sales. For anyone with cash ready to go, this could be a once-in-a-generation buying opportunity.
And if that wasn't enough, here's another ticking clock: bonus depreciation. Think of it as a massive tax cheat code for real estate investors that lets them generate tons of tax-free cash flow. Well, as you can see, it's being phased out. The window to take full advantage of this incredible incentive is closing, fast. And that's putting a ton of pressure on investors to make their moves now, not later.
So you're probably asking, okay, this is all great, but how do I actually do this? How can I put this into practice? Let's walk through a simple, actionable blueprint for making this shift away from chasing net worth and toward building real, sustainable cash flow.
The whole framework is built on what Robert Kiyosaki calls the 3 E's. It's simple. First, education. You have to invest in yourself first. Learn how to read a financial statement, how to analyze a deal, how to know what an asset is really worth. Second, experience. You can't learn this just from a book. You have to get in the game. Start small, make your mistakes when the stakes are low, and learn how things work in the real world. And third, you need excess cash. You've got to have that capital, that dry powder, ready to go when you spot one of those amazing opportunities.
And all of this really comes down to a profound mindset shift. This isn't about getting rich quick or flipping a stock for a fast profit or getting lucky on some meme coin. It's about methodically, patiently building a system, an asset column that produces income for you month after month, year after year. It's the difference between being a gambler and being an engineer of your own financial future. So I'll leave you with this one question to think about. Take a hard look at your own strategy. Are you building a net worth that's totally dependent on the whims of the market, one that could literally vanish overnight? Or are you building a resilient, predictable stream of cash flow that can truly set you free? The answer to that question, well, it's pretty much going to determine whether you spend the rest of your life working for money or if you finally make your money start working for you.